This is
Make it plain.
Make it plain.
MIP
With Masamela Matfumo.
Mark Thompson.
Make it plain.
Get woke.
Ladies and gentlemen, as always, it's first of the month, and we want to, the first week of the month specifically, we still call it first of the month though, because that's the opportunity. There is no first of the month without Chad Stone in the Center on Budget and us having a conversation about the latest jobs numbers. And this month, of course, we just received the April jobs report. Chad Stone joins us to discuss it, as always. Again, Chief Economist at the Center on Budget and Policy Priorities. Chad, how are you, buddy?
I'm good, Mark. How are you?
Just fine. Always a pleasure to have you. We were just lamenting his team over the weekend, the Phillies. The Phillies had a rough weekend, but the 76ers had a good one. And I was thinking about you, though, man, because I'm gotta get to Philly so we can go to a game. I still definitely want to do that. So we will do just that. So, Chad, first of all, want to start out because last month you talked to us about the importance of revisions and the role that revisions play. There were some slight revisions from February and March, correct?
Yes.
And but the number was like almost 40,000. Is that considered a lot or a big deal?
That's a relatively small correction, but we had been seeing large adjustments going the other way for a while, adding to past months and adding to the totals created since the before the pandemic, reducing the jobs deficit compared with what it was in February 2020. But this time, but we did have 428,000 jobs, and then the total for the previous 2 months got knocked down by 39,000, which is not a big deal. That's still a very solid job creation. It continued to reduce the jobs deficit compared with where we were in February of 2020, just before the pandemic, but still we're down 1.2 million jobs compared with what we were in February 2020. But that's way down from that deficit has shrunk a lot compared with where we were in the recession when it was over 20 million people. So there's still some ways to go, but we've been getting better every month for quite a while now. I'd point out, we always talk about leisure and hospitality, and leisure and hospitality was one of the industries that contributed a fair number of jobs. They were the leading contributor among all industries to the job creation, but they are still down 1.4 million from where leisure and hospitality was in February of 2020. So that's more than accounts for the 1.2 million overall jobs deficit. So there's still plenty of room for growth in leisure and hospitality.
So, but just before we leave the revisions, as you mentioned, most revisions we've discussed have been additional jobs. This was down. And I know it's not a lot of numbers, but just curious, any idea what that's about? Why? What might have caused a downward number? This time too small to assess. So
it is small, and the revisions are not necessarily related to the state of the economy. They're related to the pace at which employers get their information in for the monthly jobs report. Employers have 3 months to get their information in for the month being reported on, and so it could be some, but it's about data reporting, not about the underlying state of the economy. The underlying state of the economy is strong, and the job creation is strong, and it's a fluke. Back in normal times, there's numbers like that, 10 to 40 thousand routinely, and then we had big ones because of data collection problems and reporting because of the pandemic. But to the extent that things are normalizing somewhat, we're kind of back to the smallish revisions. I could be proven wrong next month, as I frequently am, but it's always dangerous to make predictions about the future.
I don't think in all the years we worked together, knowing each other, I don't think you've ever been proven wrong or accused me wrong about anything, Chad, that I can recall. I think you've been right always.
Well, I appreciate that.
That's my recollection. But now you mentioned leisure and hospitality, and them that industry still being behind. But I want to be clear: is leisure and hospitality itself any more unusual than any other industry? In other words, is there another industry that is coming back more quickly than leisure and hospitality?
There are some, but what's the thing about leisure and hospitality is that the leading sectors, eating and drinking places and accommodations are places where there's a lot of face-to-face communication, and where the workers are predominantly lower wage workers who may have situations that make it hard for them to come back to work, and because of the remaining health risks from the virus, people are reluctant to come back into face-to-face jobs. So that it's probably primarily on the labor supply side rather than the demand side. I mean, there's lots of job openings. Employers want people, but people want to be safe.
Yeah, no, and right. And I think too, looking at that industry also, again, correct me if I'm wrong, I'm going to pretend to be somewhat of a forecaster like you. Overall, looking at that industry would seem that if that's still not necessarily slow to come back, but at its own pace, it suggests that COVID is still somewhat of a factor out here. While, a lot of people think that it's over, COVID is done, but that ought to give us pause and say to us, well, maybe not quite. There's a reason why these are jobs with the most human contact on both sides. If COVID was completely gone, they would logically be the industry that would be recovering the most quickly. Right. But it says a lot, because you're talking about leisure and hospitality. Are people out here resuming traveling and vacationing as quickly as we thought they would, or as we think they are? And on another thing, this is probably another show, is the travel industry price gouging in anticipation people are desperate to get back out here vacationing. So that's a whole nother thing, because you look at some plane tickets now, and it's like they know it's the summer. Y'all haven't been anywhere for 2 summers, so we're going to charge $10,000 plane tickets. Of course, I'm exaggerating, but that might still, all of that is COVID related, is it not? That even if there is a price gouge, people are still taking advantage of the fact that there has been COVID. People are coming back from COVID. So I'm really not that surprised to see that. And I'm sure there are people who are still somewhat trigger shy about traveling, one. And as you said, the people who are working in those industries are the most exposed, are the most vulnerable. And just to stay at this point for a minute, how are we doing in wages? I mean, I know this isn't directly related to this job report, but how are we doing in wages in leisure and hospitality, to the point where is it worth people coming back and taking a risk for what still may amount to a few dollars, to some pennies? Do we know?
Well, yeah. In fact, if we look at the wage gains, they've been very high in leisure and hospitality, and in some cases high enough to be significantly above inflation. I mean, to have a real wage gain of 2, 3, 4, 5%. Now, that's slowed a little bit in April, but and to be clear about leisure and hospitality, like the job market in general, it's come back quite a bit from the worst of the recession, but we're living in the present, and there's still a big gap there, a gap in leisure and hospitality that's bigger than the overall gap. By 200,000. Yeah.
Small decline in the labor force participation rate and in the share of the population with a job, tenths of percentage points. Anything I mean, it is very small. Anything we should read into that?
Right. So up until now, we've been talking about the payroll employment side of things from the survey that asks employers, how many people do you have on your payroll? But the unemployment rate and the labor force participation rate and the share of the population with a job, those come from a household survey. And in fact, and that's where the unemployment rate comes from, asking people, how many people in your household are working, or what's the labor status? Are they working? Are they looking for work? Are they not looking for work? All those data. And while we had strong payroll job growth, oh, and also the survey of households covers different, the survey of businesses is just non-farm business establishments. Survey of households does include farmers, includes people who are self-employed, not the corporate law firms that are sort of self-employed and register as corporations, but individuals who are self-employed. They are counted in the household survey, but they're not on the payroll side, and so there's a different coverage. So they're two different surveys. They're not completely related, but the household survey was a little bit weak. The unemployment rate stayed at 3.6%, which is a quite low number. That's good. That says there is strength in the labor market. But the other measures, so the size of the labor force dropped, and so the labor force participation rate dropped. So population grew, people, but people, now I'm sorry, I'm interrupting myself, but there's a lot more variability month to month in the household data. It's a smaller sample, and so it can jump around, it can move around a little bit more. So this was a little bit surprising that that payroll employment and the share of the population with the job fell a little bit. I expect that's temporary, and that we'll be back on track with labor force participation increasing and the employment to population ratio increasing. But this month there's a little bit of a disconnect because of the payroll being solid, but the unemployment rate was steady and low. And although still too high, the Black unemployment rate dropped below 6%, which is what it was just before the recession. So it's still too high, as we always talk about, but it's come down back to what it looks like in a strongish economy. It's better than the reverse.
Well, and we look at February 2020 numbers. A lot of categories of the rates by race and ethnicity are almost the same. So February 2020, the white unemployment rate was 3%. April 22, 3.2. In the Black community, it was 6% in February 2020, folks, and it's 5.9 in April 2022. For the Hispanic population, 4.4 in February 2020, 4.1 in April 2022. And for the Asian population, 2.5 in February 2020, 3.1% in April 2022. So there's a small increase in the white and Asian unemployment rates and a small decrease in the Black and Hispanic unemployment rates since February of 2020. So for Black and Hispanic populations, that's a good thing. For white and Asian, again, it's almost negligible, especially for the white unemployment rate to go from 3.0 to 3.2 is not that big of a deal. Just like going for the African Americans to go from 6 to 5.9 is not that much of a difference either. But we're still, as we always say, at that place of being double practically what the white unemployment rate is. And we look at Hispanics as well. And let's face it, a lot of the people who, as we were talking about in leisure, a lot of people who work in leisure and hospitality are the people, are Black and Hispanic workers. That's just a fact. And even if not leisure and hospitality, we know this too, Chad, that many of the jobs that people are coming back to are virtual. A lot of companies aren't going back into brick and mortar, at least not yet. Some say they aren't going back at all. I just heard that over the weekend. Somebody's about to get a job at a new company. So, well, Mark, I'm going to stay working at home forever. I said, how can you do that? He said, well, my company's not coming back. So that being said, many of the jobs that are virtual in that way are the higher end jobs, the majority of which do not go to workers of color. And so, yeah, the white unemployment rate is probably going to go down more rapidly and stay down as long as that's the case, correct?
Yes, all rates are coming down, but as you say, the white rate is low, and the Black and Hispanic rates are higher, and that's a historical pattern, and we're continuing to see it. It's better that all those rates are low rather than high, and we have a disparity. But even though they're low, we still have the disparity.
Yeah. Now, just want to point out, we did touch early on, and I just want to lift this up in terms of Chad's numbers and his analysis. And folks, we invite you always to check out Chad's thread on Twitter, Chad CBPP. Always a lot of interesting information there. The share of the 16 and older, the total population with a job, slipped to 60%, but is well above the low of 51.3% going back to 2020, and that would be in April. However, for 25 to 54-year-olds, the share of the population with a job is only 0.6 percentage points lower than it was in February 2020. So that's a good thing. 4 million people were working part-time for economic reasons in April, meaning they were involuntarily working fewer hours than they would have liked. That number was 10.9 million in April of 2020, and 357,000 fewer than in February of 2020. Any significant change between the part-timers in April 22 and March 22?
That changed a little bit. Came down a little bit, but it is notable that for several months now, the latest month, part-time for economic reasons, is a smaller number than before the Great Recession. So that's an improving statistic, unless it means that people are dropping out of the labor force. But that labor force participation is not going down. It's been moving up too. So I think in general it's a good indicator that there's less part-time for economic reasons, and that's because of the stronger economy.
We always like to talk about education. 698,000 jobs in states and localities since February of 2020. Now, how did we do this month on state and locality? And I guess we should probably anticipate summer's upon us, school's going to be out of session. Those state and local jobs, if education is a big factor in those numbers will probably go down again, won't they?
Certainly, there's an increase in there are changes that are normal seasonal changes, and we'll see what happens in the summer, because I promise not to talk about seasonal adjustment, so I won't go into detail about it. But it complicates it tries to correct for changes you expect to see, and whether what you actually see is stronger or weaker than what you expect to see for seasonal patterns, like the hiring season before the holidays in the fall and winter, and the going back to school or going out of school in the school year. Those create normal fluctuations, but in strong labor markets, you outperform the normal expectations, and weak, it goes the other way. So state and local jobs are still down a lot, and education accounts for half of the jobs that they're down. So that's still an issue.
Yeah. And also, of course, we always check in on where things are with women, and Latino and Black women experience the greatest job losses. But those numbers are finally coming back, aren't they, for Black and Latino women?
Yes, Black and Latino women in April 2020, which is the depths of the recession, had the biggest job losses compared with February. And then a while later, they still had bigger losses. Everyone's lost. So we're talking about white, Asian, Black, and Hispanic groups and women. And in the latest few months, Black and Hispanic women are above where they were in February 2020 by a little bit, and white are below. White women are a little bit below where they were still. Now, this is for the prime age population, age 25 to 54, the people most likely to be working if they want to be working. Those are the prime working years.
Yeah. All right, so that's good. That's good news. So seems to me, Chad, things can still, despite some small revisions and small percentages, seems like things can still only continue to get better. February 2020 and April 2020 were so bad. The fact that the recovery has been even quicker than the big recession, and the fact that it was related to a pandemic that, again, most of us believe we're out of, and I hope we are. We want to have faith in that, but we'll just have to see. It seems to me that really things can only get better, right? Continue to get better.
Likely, we have to talk about the situation with inflation and what the Fed is doing, which is to try to slow down the rate of growth of not throw us into a recession. So that's a factor that may be at play. But in terms of the goal, February 2020 was a while ago, and in the meantime, we've had population growth. And if we hadn't had the Great Recession, we would, if we continued the expansion, we would see everything should be above February, or should be better than February 2020 levels, just by virtue of growth. But because we went through that very serious recession, and the recovery, as you say, was much faster than the recovery from the Great Recession, but it's still a recovery that has a ways to go.
Yeah.
And
a little bit. So I know you don't want to get in the forecast, but the Fed did make a decision. Help us understand what impact you think that will have overall?
Okay, so there's no question that inflation is unacceptably high, and it affects everybody. And we talked a little bit earlier about how some low-wage jobs have actually seen pretty substantial, as a group, don't have the data for particular individuals, but lower wage jobs have seen better growth, sometimes a little bit ahead of inflation, but nominal wage growth, not corrected for inflation, overall slowed a little bit in April. And if it, and that's okay in terms of reducing inflationary concerns from wages rising so fast that employers are just passing on the prices. We're not in that dynamic yet, but the Fed will be aggressively raising rates, and that means that there's a risk that it won't go as smoothly as we would like, but there's also the real possibility that it could. In the short run, getting wage increases is a good thing for folks at the bottom, and we've seen that happen. But if the prices, if employers are passing on wage increases into their prices, then that creates inflation that is problematic for everybody, including low wage workers. So what the Fed we would like to see get inflation down without throwing and have a soft landing, but that's tricky business. And so the future is, as you said, I don't like to predict the future, especially when there's so many moving parts and so many different possible outcomes. The ideal outcome, which is achievable, which is within the realm of real possibility, is that we do kind of settle down. We're not going to get back to 2% inflation by the end of the year, but I believe that in the second half of this year, we will see, instead of each month's inflation report saying, whoops, higher than last month, whoops, highest in a long time, that it'll start to be going down. And they'll say, oh, didn't go up as much in the 12-month in the 12-month period in July as it did in June, and in August as it did in July. That's what we can expect to see. And if it's accompanied by the economy slowing down how fast it's expanding rather than going into a recession, that would be the best outcome. And it's within the realm of possibility. It's not crazy to think that it can happen. We're not doomed to a recession.
That's good to know. And we'll hope for the best, of course.
Yeah.
A new year is full of surprises, but one thing is always predictable: postage costs go up. Stamps.com gives you crazy discounts of up to 89% off USPS and UPS services. So when postage goes up, your business will barely notice the change. Stamps.com is like your own personal post office, wherever you are. You can even take care of orders on the go with the mobile app. No lines, no traffic, no waiting. Schedule package pickups, automatically find the cheapest and fastest shipping options, and seamlessly connect with every major marketplace and shopping cart. There's even a supply store where you can stock up on mailing supplies, labels, even printers. Stamps.com has been indispensable for over 1 million businesses just like yours. All you need is a computer or phone and printer. Take a chunk out of your mailing and shipping costs this year with Stamps.com. Sign up with promo code PROGRAM for a special offer that includes a 4-week trial, plus free postage and a free digital scale. No long-term commitments or contracts. That's Stamps.com code PROGRAM.
Folks, again, on Twitter, at ChadCBPP for Center on Budget and Policy, Center on Budget and Policy Priorities, and also centeronbudget.org. As always, we talk monthly about the jobs report. We'll continue to hope that we'll continue to climb out of this and things will get better. They have been, no reason to think they won't, but Chad always gives us his expert analysis as chief economist of the Center on Budget and Policy Priorities. Chad, as always, thank you, buddy.
Great to be here, Mark. Thanks.
Thanks for getting woke and listening to Make It Plain. As always, perform an act of kindness on behalf of an elder or young person. Write a letter to a sister or brother who just so happens to find her or himself incarcerated. Offer libations to the ancestors upon whose sturdy shoulders we all now stand. And above all, give thanks to the God of your understanding by whatever name you call her and him. All God asks of us is that we give each other love. Thanks for giving MIP love. And please remember to subscribe and give us a 5-star rating. If all hearts and minds are clear, it has been made plain.